Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Hello, welcome to the Massive Passive Cash Flow podcast. This is Gary Wilson, your host. We're glad to have you back. Hey, if you haven't done so, if you could please go ahead and subscribe to the podcast. It's on 30 different channels, including the biggies, iTunes, iHeartRadio, and Stitcher. So if you could do that, that would be wonderful. We've got a great guest today, Dionne Payn, who I'll introduce in just a moment. But I want to also let you know that we do have a new website developed called globalinvestoragent.com. And we have agents now in 28 different locations, mostly in the U.S., but some abroad. And they're not your traditional real estate agents. These are agents who are actually trained to work with you and I, the investor. They know how to identify, analyze, and negotiate on and off market deals. They actually have access to data that most agents just don't have. Access to, in fact, all the properties in the United States, they have access to people records, property records, court records, which is everything you need to be successful investing. So I suggest you grab one of those guys. So go to globalinvestoragent.com, click on agent profile, and you can see them. You can search by name, location, and connect with them. They'll be glad to hear from you, and I promise you they will serve you well. So in any case, without further ado, Dionne, welcome to the podcast. I'm so glad you're being able to do this. I know you're a successful person, and we're lucky to have you. So welcome aboard.
Thank you, Gary. It's lovely to be here.
If you wouldn't mind, do you mind giving us a little bit of background? And I know as soon as we let people know you're in Australia, they're going to have a million questions. What's it like down there? Have you ever surfed waves down there? Do you scuba dive? Have you ever had a kangaroo as a pet? Those kind of things. So, yeah, exactly.
I'd love a kangaroo as a pet, actually. They are so cute, but they're pretty brutal. My husband got kicked in the testicles by a kangaroo. When he was younger, he came to Australia and he tried to hold one's hand, because you know how they stand there like that. And he tried to hold them by the hand, and it just sort of got up on its tail and kicked him in the testicle.
Oh boy.
So, yeah.
That's not going to feel good.
No.
Well, I'll tell you what, fill us in on, how you got to where you are, what was your background a little bit, and then we can go into maybe some examples of what you're doing today and help the folks who are listening. So, yeah. Yeah,
great. Well, look, I got started in real estate quite late, actually. I was a research scientist, and I studied, and that's why I came to Australia. I got a scholarship to do a PhD. And we got enough points to stay in Australia, so that was fantastic. And then when it came time to settle here and to purchase our own property, we just realised that we're in one of the most unaffordable locations that we could possibly be in Australia, outside of Sydney. And so that prompted us to get educated about real estate, because for me, it was a case of, if I can understand the system of real estate, then I can get into real estate. And so that's what we did, and did some education. Our very first project was a small renovation and subdivision, and we did that with a joint venture partner, and he had cash. We didn't have cash, but we had heaps of time, so it was a good partnership. And at the end of that, we made money and felt really satisfied with what it was that we were doing. So we just continued with that. And then the sort of highlight of my career was maybe about 3 or 4 projects in, when I saw a piece of land which was advertised for, it already had development approval for 14 one-bedroom townhouses, and 3 of them were for affordable rental, and the rest of them were just affordable in terms of owner-occupiers. So I did the research, I did my feasibility studies, and realised that we could definitely do something like that. And to be honest with you, at the time, the motivation was the dollar signs. I was like, we're going to make a mopsa from this. This is going to be fantastic. And then as I had friends and members of the community purchase these to live in, and it was the only option for them to stay in the area, it became more than just the money. It became a project that I was invested into heart and soul as well.
Excellent. Yeah, it sounds like so. For those who are familiar with Australian real estate, when it comes to the English-speaking countries, U.S., Canada, England, Ireland, Scotland, New Zealand, Australia. A lot of the laws are very similar. They're all based on old original English law going back to like the 12, 13, or 1400s. So I know a lot of investors who will invest, particularly in those countries, because it's familiar to them. There's a certain level of security and familiarity. So, but when it comes to the market itself, the economies, of course, were all different, But and you mentioned earlier that the things were just not very affordable there. So these projects, like the very first one you mentioned, it sounded like it was a remodeling. Was that in a location where you're able to make the properties available at a more affordable rate? Was that sort of the thing? Okay, wonderful.
We did actually, and I hadn't even clocked that, because that was really our very first affordable housing project. Mm-hmm. The property had a house and a studio on it, and they were attached by a roof. So we removed the roof and then separated them, so the house and the studio were sitting on two separate titles. And that studio, it was a one-bedroom studio, and that actually sold. That sold for less than the one-bedroom studios than we created 4 projects in. So I hadn't actually clocked that was my first affordable housing project, and it was also my first project.
Nice. Okay.
Yeah.
Well, it sounds like you've got some good experience there. Now, have you ever helped other investors wanting to invest in Australia too, from New Zealand, Canada, US? There's mostly been Australian investors you've worked with, or?
It's mostly been Australian investors that I've worked with, and I definitely have worked with other investors. And one of the really key things that I realised early on was that partnering with people, so bringing in joint venture partners, that was definitely the way for us to go. And over a number of projects that we've done, we've always worked with joint venture partners. Some have been great, some have been not so great. and there's reasons for that, in terms of aligned values. Sometimes the value alignment wasn't always there. But no, we've always worked with joint venture partners. And over time, I've realised that for me, if I wanted to continue development, I really needed to scale up and have a bigger company. And I didn't want to do that. But what I did enjoy was the working with joint venture partners, working with investors. And so now what I do is raise capital for developers who are doing those kind of projects. I call them ethical property developments. And so I raise capital for them. So the really key thing is that if you invest in affordable housing, if you invest in sustainable housing, if you invest in homes for inclusive homes for people with disabilities, you can still get really good returns, really good financial returns, but you also get the social and environmental impact as well, which altogether feels really nice.
Yeah. Well, let's talk about that some more. That actually sounds very interesting. And I know a lot of people are now really paying attention. You talked about raising funds and bringing people together. So fill me in there a little bit, about the basics, the rules of the game. If there are any regulations, restrictions, requirements, things like that, and maybe we can give an example of one of the projects you've done where you help raise funds, either in Australia or US or even both. We can talk about that transition if you don't mind sharing. That would be awesome.
Absolutely. Well, look, there definitely are rules of the game, because one of the things that, as an investor, what you're doing when you invest with somebody else is that you're handing over your control in some sense. So if you're going to hand over your control, then you just need to make sure that there's things in place so that the risks are minimized for you. So what I've put together, I call the ethical framework. And it's really about making sure that the intention behind the investment that you've got is carried out by the developer and the team that you're working with. So if we break that down, the ethical framework, E is for experience, and it's really about, as an investor, understanding the level of experience that you've got. Now, if you've done a number of investments yourself, whether they be regular investments or whatever, you've got that level of financial literacy that makes it easy for you to understand how a project is going to run and the different intricacies of that. And it makes it easy for you to do your own due diligence. Now, if you're somebody that's starting out, you might not have the experience, but you can get the education, and that's going to be really helpful to do that. I also talk about track record. So T is for track record.
Okay.
And it's really important that, number one, you know the track record of the developer that you're working with. And it's going to be the same the world over. We get boom and bust cycles. So a developer that's been around in those boom and bust cycles is going to be more risk aware than somebody that's just seen a boom, like, you know, coming at the start of the boom and gone, oh, well, yeah, I'm going to make a mozza and this thing's never going to go down. Well, that's a very dangerous position to be in. So you really want to be working with a developer that's got a really good track record, and not just a track record in property investments, but also a track record in high impact property investments. So definitely having that understanding of the beautiful thing about ethical property investing as a whole is that we're bringing our creativity. So developers are very creative people, and they make stuff happen, which two very good skills. So the really key thing there is that they're bringing their creativity in a way that serves as many people as possible, and that's what I really like about this. It's there's sometimes that I'll be working with a developer, and something will come up, but they'll understand or they'll know the questions to ask to be able to solve it. A developer that I was working with, he told me the story. He said, the architects, they're a global architectural firm, and their architectural fees were really high. And the developer I was working with, Simon, wanted to work with this guy because he'd already started to do the pre-designs. And Simon managed to negotiate a quarter of the fee. And I said, well, how did you do that? And he said, well, it was understanding different ways that we could tackle this problem so we could basically not make it as technical as the architect wanted it to be. And that's the level of creativity that good developers have. So you want to be working with a developer that's got that track record. And often that comes with years of experience. So that's a really good sign. So then H is for high impact, and that's where I talk about the affordable housing, the sustainable housing, building resilient communities and building inclusive homes for people with disabilities. And my take on it is that if we invest in this way, we have an enormous amount of power as to where we invest and where we spend our money. And the challenges that are facing us if we don't address these issues, they're facing us all. It's not just isolated to somebody that has a disability. It's not just isolated to somebody that's homeless. So I feel that we not only have a responsibility, but we have it's future-proofing ourselves, actually, if we take care of that. And when you can do that in a way where, as an investor, you get double-digit returns and you can help people, I think that that's just a really good combination. And then I is for investment risk. And yeah, you really have to understand as an investor what your risk profile is, and also the risks that are inherent in a development. And the developer needs to be very clear about what those risks are and how they plan to mitigate those risks as well. And when you've got that, you can sleep better at night because you know that stuff does happen, definitely. But if there's a plan in place to be able to tackle it before it becomes a really big problem, that's a good sign. And then C is for collaboration partners. So working with a developer, and the way that I talk about working with developers is that definitely as a syndicate. And so when you're in a syndicate, there are definitely, for a developer, for those bigger projects, there are lots of team members, and they have to be able to work with those team members. And those team members as well, rather than just seeing it as a job, they have to be invested in the outcome as well. And then we talk about A for aligned values, and everybody on the team has to have aligned values. And I don't know about you, but I know for myself, when I've worked with people where the values are not aligned, it can be really painful. So understanding what your values are, what your hopes are for the money that you're investing with is really important, and to make sure that the values line up with the team that you're working with. And then L is for legacy. And one of the beautiful things about the 14 townhouse development is that every time I walk past, and I was there the other day taking a photo, but every time I walk past, I have this sense of pride in, wow, we did that and we did this for the community. Now, as I mentioned before, our motives initially were very financially driven. But as time went on and we realised the benefit that it would have for the community, it was really important to get it finished. So for anybody that is in that position where they've done an investment and they've created something that has benefit for more people than just themselves, that's a fantastic way to leave a legacy. And you never know the lives that you touch, or the stories that happen as a result of that work that you've done. So that feels good as well, to be doing something, to be doing a good deed in a sense, where you just touch so many people's lives. So yeah, that's the ethical framework. And if you follow that framework, then you really maximize your chances of being in a successful syndicate project.
Yeah, I agree 100%. I mean, there was a couple of key things you touched on there, and the alignment was probably one of the biggest ones for me, because I've had partnerships in the past, and really when there were differences or even things that led to conflict, it in every situation you could trace it right back to the difference in values. So I really appreciate the ethical framework is really important. And is that something that people can look at? They can find online, like a website where that's described again? Oh, wonderful. Yeah. By the way, what is do you have a website people can take a look at and see? And
I do. We're in transition at the moment, but if people go to highimpactpropertyinvestments.com.au, they'll be able to find my website. I've also written a book, and we launch on the 8th of March, which is International Women's Day. So everything's laid out in that. And I don't know when this episode will be available, Gary. I don't know if it's going to be before then or after, but on launch day, I'm selling the book I'm selling the Kindle version of the book for 99 cents, because I really want to get this into the hands of as many people as possible. So for anybody that would like to purchase the book, at whatever stage, whether it's on launch day or afterwards, if they go to highimpactpropertyinvestments.com.au,
okay,
they will be able to get a copy of the book and read a lot more about the philosophy behind what we do.
Wonderful. Okay, I'll make sure we put that in the show notes. But we still got more to my head's full of questions. So, now when it comes to the syndication part of it, are you able to do that? In Australia, obviously, I'm guessing U.S. How about other countries? If you
at the moment I'm focusing on Australia and the US. I've got a developer partner in the US, and they're great. Like, what they're doing is retrofitting homes. So rather than building new, they're retrofitting homes. They are winterizing them, so they're putting double glazing in, they're putting insulation in, they're putting smart technology in. So as an example, if you have a pipe that's about to burst, the system monitors that it's about to burst, and you can get in there before it leads to costly repairs. And so, it's things like that. And they're just being very, very clever with the way that they're doing that. They're also putting in solar and battery systems. So these houses, the company's called Cocoon Technologies LLC. And really for them, it's about creating cocoons for people to live in. And they have a very innovative financial model for people as well. So not only is it meeting the social impact, it's also meeting the financial impact for those that are in need of affordable accommodation, an affordable way to get into the housing market.
Okay, wonderful. Now, do you have any examples in the U.S. of where you were pulling the funds together, and I guess maybe investing in the U.S. too? Other examples or case studies? I know you have to. The old phrase is change the name to protect the innocent, but I'm sure that wouldn't be cross any ethical lines as far as people's names and things like that. Because I know a lot of people listening. We run a wide range of listeners from multiple countries and a lot of professionals and business owners that are very entrepreneurial. So this is and raising funds for investments. That's a big thing, especially now the way the economy is, and interest rates are going up in March. By the time this is published, it likely will be April, by the way. So, there's the challenge in Ukraine and inflation and all kinds of things. So typically what happens is banks tend to tighten up their traditional funding from banks, conventional banks, commercial banks starts to get tighter. So this subject is extremely timely,
Hi, Gary here. Just want to say thanks real quick for
for listening to the podcast. We really appreciate you doing that. And all I want to do is take a quick minute to introduce you to the Healing House Foundation. Okay, so if you're watching this on video, I'm going to let you see it. If you're on podcast, you're not going to be able to see it, but you can see it in the click on the show notes on globalinvestoragent.com, and you can see, well, that's the main website, globalinvestoragent.com. And so it's a great place for you to connect, not just with me, but with all the agents we have around the country, and check it out. But more importantly, if you click on the Healing House Foundation, okay, you can read all about it. And this is a 501(c), totally voluntary. Nobody here makes a dime. So all the proceeds, 100%, go to local needs in your area where you live for people that need help, all walks of life. I mean, every one of us knows somebody that needs help. And this is our way to come back full circle in the world of real estate where we make so much money. Let's help those who are in need. Sometimes they need a helping hand. Sometimes they need to be taught how to fish, and sometimes they just need to fish. Sometimes they need both. So this is a way for you to participate. Check it out. All kinds of stories, examples. It's very flexible in that we can earmark funds for a particular need that you have in your area, as long as it's related to the need of housing. That's all. It doesn't matter what the underlying circumstances are. We pray for healing for everybody. So in any case, thanks for indulging me. Let's get back to the podcast.
Yeah, and I had a conversation with my bookkeeper the other day, and we were just talking about how entrepreneurs in general are really great at making money, but they're not so good at making their money work for them. Yeah. So this kind of thing where you're investing into property and investing in areas where it's actually needed, where the demand isn't going away, the demand is just increasing. It just feels like a real game changer to me, because number one, even with all of the things that are happening around in the world, people still need affordable homes.
Absolutely.
So that for me, and there's also a lot around when you're investing in a purpose-driven way. I don't know. It just seems easier somehow. I don't know. It's not to say that they're not challenges. There certainly are, but the challenges seem much more surmountable because you've got a reason bigger than just the investing for its own sake.
Yeah. So what are some of the mechanics of an actual are you marketing or advertising a particular development or project to raise funds, or is it just a general, an outbound marketing campaign? If you're looking for an investment, go to this website. How does it actually work? Like, people are always curious. Well, what actually is a syndication? What does that actually mean?
Okay, well, let me give you a case study. So, back in September 2020, so this was where I first hit on this whole concept. And at that point, I knew that I didn't want to do development myself. I knew that I wanted to support other developers in raising capital. So what we did was we partnered. So I partnered with a developer, and I also partnered with a real estate educator, and just said, well, the developer had a project which was a commercial subdivision. So it was basically converting one large property into 5 individual tenancies that could be sold separately. Mm-hmm. And so the developer had that project. He had the skills and the expertise to be able to deliver on that project. He had a great track record. So I knew that we could definitely trust him. And then I worked with the commercial real estate educator, and she had heaps of clients who wanted to get into commercial real estate, but didn't quite have enough to be able to do it themselves. So we put together a syndicate project there with some of her investors, and they pooled their funds. We worked with an accountant the accountant had the money in the trust account, and then when it was fully subscribed, the money went to the developer. And so, as part of the project, there were milestones as well. There were monthly Q&A webinars, so the investors could come on the webinars and ask the developers questions. This was the opportunity for the developer to share how the project was going. And in between, I also interviewed the consultants that were involved in the project as well. And what I wanted there was, number one, to be able to educate the investors as to this is how you run a live commercial real estate project. But also there was validation there for the investors that, if the developer had said a couple of weeks before, oh, we're going to be on to this stage, I was interviewing the people that were actually doing the work. And so there was that third party verification that the work was actually being done in the time that it was said to be done. So that gave investors a whole lot of transparency around the process. The project ended, the investors ended up with a 30% return on their investment. And they were so happy that they went and invested in the next project, because not only had the developer delivered a really great result, but we'd kept them informed in the process. And again, even though it wasn't a high impact project, as I sort of went on later to do, it just gave a lot of transparency to the process, and the investors felt that they were part of something bigger than themselves. So that was really cool. And I just remember, the first time round when we asked, it wasn't hard to find investors, definitely, because once we presented the business case and presented the skills and expertise of the developers, it was a no-brainer. But it was so much easier the second time round to find investors, because they'd already made the money. 30% in 12 months is a pretty good return, and they were keen to do that again. And so that's the model that we use for all of our developers. We really want to make sure that investors are informed, because at the end of the day, the development industry is a bit of a closed shop, and there's lots of stories about people that are being really dodgy. So the whole way that we do things is really about bringing that transparency in, making it really open so people can see and feel part of it as well.
Okay, wonderful. Now, a couple more questions. I know we're getting close on time here, but being in the U.S., obviously, I've spent a good bit of time in Canada. In fact, I lived there in Canada for 5 years, and a lot of Canadians would invest in the United States because there was more opportunities, the prices were lower, and the returns were higher. But they also had to pay an additional tax on that. The Canadian government, said, okay, you can do that, but we're going to charge you 10% tax on your foreign income. Something like that. So is there anything like between Australia and the US, do we have things like that also to contend with,
I believe that there would be. And to be honest with you, it's not my area of expertise, because for me, at the moment, I'm doing investment projects in Australia and investment projects in the US. For investors in the US, I'm just keeping them with the US-based projects. With investors in Australia, I'm keeping them with those projects. When we get larger, as we scale, then we'll cross jurisdictions. But I know that that's going to come with a whole lot of paperwork, a whole load of bureaucracy, and a whole load of costs. So we're not there yet. But as soon as we can be, then we definitely will get those professionals on board and just make it easier for people to invest across jurisdictions.
Nice. Okay. So going forward, what do you see in the way of opportunity for this going forward? I know affordable housing is becoming more and more of a sensitive subject. But what are you seeing for the future? I know it's obviously we're guessing here, but we're always interested in our guests' opinions. And collectively, everybody just formulates their own opinion, but they take everybody else's into account. So.
That's true. Look, like I said before, the need for affordable housing isn't going away. The government can't do it by themselves. I don't think they've got the will really to change the system that's going to be benefiting them. So I really think that this is a massive opportunity for investors to get into it. What's really cool is that the big industry funds are seeing that this is the way forward, and they're getting into it. But there's still lots of opportunities for regular investors to be able to get into it as well. The big guys, the big super funds, for example, they're looking at the big projects, the ones that cost a lot of money. They're not looking at the smaller projects, the ones that are needed in, we call it infill over here. So, where you've already got that urban area, and you've got these little tiny pockets where you can build something. So the big super funds are not looking there. So that's a really good opportunity for regular investors to be investing into projects in that scale. And you could start off with a developer that's just doing a 1 into 2 subdivision, or you could be working with a medium scale developer. One of the developers that we're working with at the moment is working on a they've got a $17 million project. Actually, no, the project itself is $100 million. They're looking for $17 million in funding. So they're sort of the larger developer that I deal with, but then you've got a scale above that as well. And the scale above that is where the super funds play. With this sort of medium-sized developer that I'm talking about, there will be super funds in there once the risk is taken out to their extent, to their standards. So it's not to say that the first part of the project is risky because there's a buyout partner that's already lined up. But even for a super fund, because of the scale that they're working at, they have to be super conservative. So, and that's where, where I spoke about before, knowing your level of investment risk. If you know that and you look at the opportunity, you go, okay, well, actually, it's not as risky because of this box is ticked. So, you just get to play at different levels depending on your level of comfort.
Yeah. Okay. Well, that's I guess one more question when it comes to a level of comfort. So someone that's new, maybe they're out of university for a couple of years or working in their profession, whether they're, teacher, policeman, engineer, what have you, and are just starting out. Are there projects that are small scale for them too, and then other projects that could be more palatable for seasoned investors who maybe already have done 30 units or something? Is it? Do you have a variety of size of projects for different people, or?
Yeah, well, for anybody starting out, I recommend that they get their education in real estate investing. They find joint venture partners and they do some small scale projects themselves. Mm-hmm. That means that, they're getting their toe in the water. They're understanding how it works. They're partnering with people who are, experienced in a sense, maybe not as experienced as the developers I'm talking about, but they've got some experience and they know how to put a project together. So I would start there with that. For seasoned investors, it's definitely easy to jump into a syndicate. There's rules involved in this, which are the same in Australia as in the US. You need to be, in the US, I believe it's called an accredited investor to be able to invest in syndicates. In some syndicates anyway, there are some I'm not going to say loopholes. It's not loopholes, but there are some cases where retail investors can invest in syndicates if it's smaller projects. But in the larger projects, you do need to be an accredited or wholesale investor. Now, what I want to say about that is that I as much as I love accredited wholesale investors and capital, regardless of where it comes from, is super important. I would really love to democratize the process for your mum and dad investors as well, because what tends to happen is, and it's totally understandable, in the past, you've got dodgy developers, you've got dodgy financial advisors, and retail investors, because they don't have that financial literacy, they've got burnt. They've put their money into projects or put their money into investments, and then it's gone. And it's usually the case that they've been misadvised to do that. So there's rules around that to protect retail investors. But what that means is that they don't get access to these really good returns that the bigger investors can get. So that's why it's really important to get that level of education, to get a few runs on the board so that you can play with the big boys, I'll put it that way. Yeah. But for me, what we're creating is a system where everybody can invest at whatever level they can play at. And so I'm developing a platform at the moment to ensure that. So that's something that's really exciting, because I really want to democratize capital so that everybody has access to these really good returns, so that everybody's investing into ethical property investments, because that's how we make change.
Yeah, I agree. Yep. And it sounds like the need is obviously probably in more places around the world than people can imagine. The need for affordable housing. It's a tremendous need. It's growing. It was not such a big problem here in the U.S. for a while, but now with in the last 5 to 10 years, the the price escalations have been so great. We've been taking in so many immigrants from the world. We just can't. The builders can't keep pace. There's just simply not enough, and so it drives up prices, and it drives out those who are not as privileged as others to be able to afford decent housing. So there is a great need right here in the United States, and I really appreciate you sharing all this. This has been a great podcast, and a definitely interesting subject, and it's nice to have your perspective too, being that you're from Australia and not from the United States. And most listeners, of course, are in the U.S., but I'm sure you may get some people reaching out to you asking, if they could invest in Australia too, perhaps, because they're just, they're tired out here in the States. There's multiple offers. People are outbidding each other. It's just people are waiving contingencies. It's gotten quite risky, but that's usually the beginning of the bubble bursting, and then we go into correction. I think that's where we are now. For anybody listening, I'm not an economist, I'm not a lawyer, I'm not an attorney, but I've been around a while, and this would be my fifth market cycle. And the fundamentals never change. They're always just, the circumstances may be different, but the fundamentals are always the same. And so it's not a reason to be scared. It's a reason to be prepared, So there's always opportunity in up and down markets. It's just understanding through education. I appreciate you sharing that sentiment also, Dionne. It starts with education. My philosophy is success is a 3-part formula. Education plus information plus action equals results, So thank you also for being here. I really appreciate it. You're doing this. And any final parting words of wisdom, or your favorite quote, favorite book, that type of thing?
Oh, well, I just actually wanted to highlight something that you said there about the boom cycle and, sort of where you are in the property cycle. There is definitely opportunity wherever you are. And I believe that if you're in a boom cycle, finding positive cash flow properties is super important. If you're in the bottom part or heading to the bottom part, because a lot of people have FOMO, a lot of people are, sort of coming up to the top of the cycle or at the top of the cycle. And a lot of people are like, I really want to get into the property market. And then they get in and then it all comes crashing down for them. But it's really about mastering your emotions as well, and not letting fear or greed really take you out of the game. Because when the market does correct, if you've got cash, that's a really good position to be in.
Oh, yeah. I agree. And one more time, as far as getting a hold of you, is the best way to just go to the website, highimpactpropertyinvestments.com. Is that the best way?
That's right. highimpactpropertyinvestments.com.au. As I mentioned before, we are doing a rebrand, and our URL is going to change. But if people go there, they will definitely get to the right place. Okay.
Well, thank you again very much. I really appreciate your insight and your expertise and being willing to share that. It's a wonderful thing. And for everybody listening, please take Dionne up on that offer. And again, remember the site will be changing. But I'm sure there'll be some transition there to everybody else. You'll automatically be linked to the new site for a while.
That's right. Yes.
And while you're online checking that out, again, be sure to go to globalinvestoragent.com and check that out. If you're a real estate agent, by the way, you definitely should go to globalinvestoragent.com and check that out, because you can become a global investor agent and serve clients from not only the U.S., but and right now we have clients in at least 13 different countries. So it's a great way for you to expand your business model and associate with other investor agents around the U.S. and a few other countries too. And by the way, one more request. If you could, when you finish listening to the podcast, please do a review for Dionne Payn's podcast. This is a great way to keep things going. That's our currency. You don't have to pay for this, of course, but we ask you to pay with your kindness of leaving a good review, because this definitely was a good podcast. And for everybody here, thank you for participating. Thank you, Dionne, for contributing. And God bless all of you and your families. We'll see you on the next podcast. Bye-bye.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.